Hi everyone. My name is Liam McMahon. I'm a currency strategist here at GlobalFxClub.com, and I'm here today to briefly talk to you about Aussie Yen, how we got to where we are, and where we can start to look for some sort of bounce or reversal. So please take a moment to pause the recording and read the risk disclaimer, which is now on your screen, and then we'll jump to the chart. Okay, so here we have the daily chart of Aussie Yen. You can see obviously very significant uptrend that we broke here when we broke below this 50 period EMA. You can see this red line held very well. 50, green is 100, tan is 200, just for future reference. We broke below this trend line, we retested it, we've fallen since then. We also closed below this 50 period EMA for the first time since last October. And that really was able to trigger some selling here. Then we closed below the 100, triggering some more selling. We're down quite a bit today. Certainly a moderately dovish RBA, this suggesting that they'll ease more if necessary. Still concerned about the elevated value of the Australian dollar. That's been weighing on the Aussie. And also the yen has been a little bit stronger lately, as we've seen the Nikkei sell off pretty well in the last couple weeks. And we've had sell-offs of 7%, 5%, 4%. We had a 3.5% sell-off last night. So every time the Nikkei sells off, we're going to get some yen strength. And that kind of double whammy has driven Aussie yen really like 700, 800 pips lower since really the end of May. So we've had a very significant sell-off. And as such, I am looking inevitably for opportunities perhaps to try to catch a bounce long before perhaps reshorting. Delete some of these ovals here. Showing you exactly what I'm looking at. Here we have the 200-day EMA. That comes in at about 93.42. Usually provides some pretty good technical resistance. It's also a very nice target for bears. So if you're short Aussie yen on a breakdown of this 50, I would be looking to target a touch of the 200 to get out. So 93.42 is the first level, and then we have this 50% fib from the major rally from around what 97.35 or so. That 50% fib comes at 92.41. So we do have a 100 pip range of support here. Obviously, I'm not going to just buy into a 100 pip range support and hope for the best. I am going to start to look for reversal patterns once we get down and touch this 200 EMA. Reversal patterns I'll be looking for sort of an inverse head and shoulders, descending wedge. This draws out a double bottom possibility. Get down here, pop around twice, break this neckline, then look to get long. Basically looking for low risk opportunities to try and get long Aussie yen for some sort of retrace higher. Now, let's delete those drawings. So we're looking in this area here, basically between there down into this area is where we're starting to get long, looking to get long. So let's assume that we do see it move lower here. Perhaps we get some negative trade balance numbers that are due out tonight. And bad NFP print will certainly, on Friday, will certainly strengthen the yen across the board. So that would also drive Aussie yen lower. All right, so let's say that we get down here. Let's say we put in, some sort of reversal pattern, chop around down here for a little bit, and then head higher. Where would I start to look to sell? All right, so we do have some significant moving average levels that we're going to want to keep an eye on. Obviously, those are dynamic levels, so it'll be harder to judge, or easier to judge, rather, or, where they're going to be coming in from when we get there. But certainly you want to keep an eye on anywhere we have a fib level corresponding with a moving average level. So for example, right now, if we fell down to this level here very quickly and started to rally, you can see that this 50 period EMA would be pretty close to this 50% fib, that 98.78. That would be the first area I would start to look at. I would also obviously look anywhere where this 100 period EMA came in as well. Even though this one hasn't been as technically significant, we tested it a couple times and then fell through it. Anywhere you can get a major moving average corresponding with a fib level, should we get that going forward, would be another opportunity to perhaps sell. On the weekly chart, you can see that really, since we touched 105, it's been pretty ugly a few weeks here for Aussie dollar. Let's clear some of these drawings. But again, we're starting to get into this range where we have some major moving average support, as well as perhaps some trend line support here on the Aussie Yen weekly. All right, so this trend line would be something to keep an eye on as well. It would take a while for us to work over to where I'd want it to test, but that's something to keep in mind where we may see an opportunity to start reloading on some longs. And then, you have to say that the trend here on Aussie Yen is pretty bullish. Certainly, as long as we remain above this breakout point here, which is really all the way down to 86 or so, 87 or so, the market remains bullish. So you keep your eye on that. You reload, you find areas to get long as we approach daily moving average and fib support. Then you have a choice to make. You can either start to rehunt shorts on a bounce, or you can just move your stops to break even and hope that this is only the first leg of another leg higher on Aussie Yen. Either way, I think the yen pairs are all entering a very interesting area for traders. There is a possibility to get long down here for a bounce, and then even if we get that bounce, there may be an opportunity to reestablish some shorts. So keep your eye on Aussie Yen here as we approach this 100 pip support range starting at 93.42, about 100 pips below the market, and we'll see if we get some sort of nice developments for possible reversal trades. All right, I hope that's helpful. As always, if you have any questions, please head on over to GlobalFxClub.com. I'll be happy to talk to you there. Enjoy the second half of your trading week, and I will talk to you soon.